For so long, interest rates have been going down. Now we are told eventually they're going to go up, but suddenly we're worried that the yield curve is flattening, or is it not? What do you think?
I think it's interesting the way you present it here as a warning that interest rates are going to go up. I think it's a sign of a healthy market. If you look at the way this whole bull run has been triggered by low interest rates, maybe these prices are somewhat elevated. So to see that the market is staying where it's staying and the rates are going up is an encouraging sign. It speaks to what you were talking about before, Wolf, about global growth and the overall strength of the economy.
Brent, what's your view on this? Do you think rising rates or trade is a bigger threat to equity markets?
I still think rising rates are a bigger threat, and I actually agree with Jamie. He mentioned suppression of rates, and I think you have to look to what central banks have done over the past few years, which I know we all talk about, but it seems like we forget when this conversation comes up. Central banks around the globe have bought tons of longer-term government bonds with the expressed intent of lowering interest rates. And now they're each and every one of them, they're taking their foot off that accelerator now at different paces. But that's largely why I think rates could move higher. And I think Jamie's 4% forecast probably has a lot to do with that. Once upon a day, Janet Yellen in a September press conference talked about Fed research that suggested the Fed had lowered rates by about 1% cumulatively. And so perhaps he's simply taking 3 + 1 = 4. And that's why he believes in the near term 4% is something that we could get to.
What does that mean for the stock market, though, Brent, if we start to see interest rates, long-term yields go to 4 or 5%?
I think it's a headwind for the stock market. I mean, I think one of the things that has driven stock prices in the past has been multiple expansion, because simply when bond yields are low, stock PEs are high. And I think now that you get the opposite side of that, where bond yields are rising, stock valuations will not be expanding on PE expansion. You're going to have to be more reliant upon earnings growth, which has been great in the first few months of the year, quarters of the year, but will eventually slow in the coming quarters. And so I just think it's going to be, still rising stocks because the economy moves higher, but the degree of rise is going to be less than it has in the past.
Rick, talk to us about what's happening to the dollar today. Do you think we're now in an environment where the dollar will strengthen even without more rate hikes in the US, just simply because there's so many reasons for other currencies to soften?
Well, I think that the Fed path does aid in certain ways, although it's not a path every central bank finds itself on. Think Mr. Carney and the last rate increase, and look at where the pound is trading today. But yes, I think that's part of it. And I do think all the other currencies of the globe, particularly the Chinese currency, which, by the way, is at the lowest level against the greenback since May of 17, they are all contributing. And it is a deflationary issue with respect to how it comes to our shores. And of course, it's going to be something that multinationals have to contend with. And the trade issues of the day are very much wrapped up in the same dynamics of globalism, to be sure. I think the dollar is going to keep going. It certainly looks to me like the euro and the pound will have enough horsepower to the downside to keep the dollar index on a nice clear path towards somewhere maybe in the neighborhood of, I don't know, I would think right around 100.
Gordon, you start to have real winners and losers when you have a strong dollar and one that is anticipated to move higher, no? You start to make choices within a market.
You do, but I think one of the things that we're seeing here is that with the attempt by the administration to deal with some of the trade issues that we've seen overseas, that you're starting to see American equities becoming the place where people want to be. And while they're obviously going to be affected by certain currency fluctuations, and you'll see that in some of the ADRs, I think by and large, the fact that the interest rates are going up a little bit and the currency is fluctuating is still not going to be enough to derail what we're seeing right here, which is a full retrace back to the January highs and maybe even through towards the end of the year.
Gordon, what do you think about some of the commodities at the moment, gold and oil, and what does that imply for equity markets?
Well, I think you're looking at contraindicators in gold as you are in the VIX, and the sense that these things are, people are not running to them as because of concerns that the equity market is going to turn around. I think that these are other indicators that we are in for a slow and steady here. The escalator is just going along nice and easy. No sign of anything to slow us down right now.
Brent, I'll ask you a further question along those lines. I mean, you've seen what's been happening to copper. That make you nervous at all? A lot of people look at copper and say, wow, that's often a signal of something bad going on in the economy, in the global economy, when you start to see the price of copper fall like it has.
Yeah, I mean, I think a lot of the commodities are caught up in the trade war rhetoric, which I think has been a way that traders have expressed their concerns. I mean, if you talk about small caps in the U.S. outperforming, commodities underperforming, those things appear to me to be based upon shorter-term thematic trade concerns, which I'm not for sure have yet really impacted the economy. They've impacted the market for sure, but I'm not for sure they're really indicating anything market-wise. Now, certainly the trade concerns are growing, and we'll see what happens, but I still believe it's very much negotiation that ends with some sort of settlement. And if it doesn't, it causes market concern. I think the president will pull back on his rhetoric.